Bharat Bond ETF by Edelweiss Mutual Fund. You can now invest in AAA rated public sector bonds with just 1,000 rupees.
Namaste, Sat Sri Akal and Adab. Welcome to this show, Bond with Mr. Bond for Edelweiss Bharat Bond, one-stop shop investment solution for all needs of the investors. First and foremost, let me explain to you what is this scheme. Edelweiss Bharat Bond Fund is a debt scheme which invests in AAA rated public sector undertaking bonds. Investors have two choices, 3-year option as well as a 10-year option, and two other choices of either investing through the exchange traded fund if you have a demat account, if not through the fund of fund structure, through the mutual fund directly from Edelweiss Mutual Fund. Today we have a very interesting guest who's an entrepreneur with many flower boutiques across NCR. Welcome, Aditi.
Thank you.
What is the question on Edelweiss Bharat Bond Fund which is on your mind?
One of the videos you had spoken about the cash flow through this scheme. How do I plan or create the cash flow, and when do I do the same? Is it from the first year of the investment or little later? What do you suggest?
Great, perfect question. First and foremost, I'm sure you are aware of systematic withdrawal plan, which is there popular in the mutual fund space.
Yes, I'm aware.
Okay, so this is the same concept which we will use here in Edelweiss Bharat Bond Fund to create cash flow. But we call it deferred annuity. And why do I call it deferred annuities? Because in the first few years, 3 years, 4 years or 5 years, let the money grow. You create a cushion in that scheme, and then after that you start withdrawing at 8%, 9% per annum. This is the way, if it's a 7% coupon which you have captured currently on say a 10 lakh rupee investment, after 5 years, that means if you defer your cash flow creation for the first 5 years, from 6th year onwards you start creating a cash flow. At 8%, you will be able to withdraw 9,500 rupees per month, and the residual maturity at the end of 10th year will still be 13.26 lakhs. As against that, if you want to withdraw a little more because your cash flow requirements are more, you withdraw at say 11.75%, which is 13,900 rupees per month. Naturally, the residual maturity of that scheme will be on the lower side, which in this case will be 10.09 lakhs. It entirely depends on you and your cash flow requirements, but you don't want to dip into your principal. So you just make sure that you create a cushion and then you start your SWP.
Thank you, Mr. Bond. That explains my query. And I have one last question. I'm still very young. Should I consider investing in pure debt schemes like this, and why?
Sure. As an investor, you have both equity as an investment and debt as an investment. So this fits in very well in that space. Having said that, I'm sure you have heard legendary investor Warren Buffett say that create a second source of income, never depend on a single source. So I have just explained to you how do you create cash flow out of this scheme by deferring, and that deferred annuity concept. So if you invest currently, 5 years down the line, you want to create a cash flow which can be your second source of income, it comes in extremely handy. So once, as I've explained in my earlier videos also, you convert this into a need and a solution approach, you will understand the importance of Edelweiss Bharat Bond Fund in your investment portfolio. Does that answer the query?
Yes, thank you so much, Mr. Bond. It explains it really well.
Great. Thank you. This is your host and host signing off from Bond with Mr. Bond for Edelweiss Bharat Bond. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.